Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the markets on Friday were closed, even though we did get the update of the US non-farm payrolls number coming in at 236. However, unemployment was slightly better from 3.6 to 3.5. This has seen relatively a weaker Australian dollar as we come into the fifth consecutive day. After rejecting that top side around high 67s, the market is very much focused on this key level at 65.90.95. A break there would give further scope and we would have to reassess the current pattern, as we could be even heading down towards the region of 65 cents with a base hold around 62.60. Still, the technicals from a weekly bias is relatively negative and therefore could see much pressure into this week. But we're getting a little bit close to the oversold, but I'm a little bit concerned on how these two indicators are marrying up, and therefore may find that 65.90 not holding and instead seeing a further trigger to a stop loss play and maybe down to 65 cents. The euro, the market was somewhat negative as the dollar increased on Friday, but nevertheless the pattern is still negative and therefore could see a further slide, and that is down towards the bottom side of around 107 and reassess from there. Any upside attempts are likely to be limited. The dollar yen, as viewed, the market is getting closer to its objective, since clearing 132 is now heading towards that 134 area. I do feel that the market may have a little bit of a difficulty in clearing this level, but overall though, if you can remember, my call still holds at 142 or around 138 to 142 if we clear 134.80. I like the way this candle has strengthened, and clearly you can see from the last 3 days that the market is very much in a bull run, and therefore let's see if we can reach that topside challenge. Sterling, well, the market's backing away since that 10-month high around 125 and now looking closer to the downside since the break around 124. Looking to the target around 122.10.15 area with the technicals negative. I feel there is little upside contest and likely to be limited. The market for gold is weaker since rejecting that top side, failing to get the confirmation above 2032 and now looking back towards the bottom side. I feel that as the technicals are looking somewhat heavy, we can see a move now down towards this bottom side, which I view is around 1,952 to 56 and reassess. Wrapping up with oil, well, I'm still waiting for this gap to be filled after seeing a 5% surge. The technicals are slightly breaking down here, so keep an eye in case we do see a pullback. And if so, that would see them move back towards the region of around $75.80 a barrel. Well, that's a wrap for the day. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoyed the great start to the new week.